My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave Dubois. And have you ever wondered how to leverage real estate investments for maximum tax benefits? Today, my guest, Tousif Rahman, an experienced real estate investor with a knack for creative deals and tax benefit strategies. He's here to unravel the secrets behind some of the tax strategies and benefits with real estate. Tousif, welcome to the show. Great to have you here, man.
Thank you. Good to be on the show as well.
So tell everyone a little bit about how you got started in real estate.
So it was more of trying to figure out the tax benefits, to be honest. I came to US about 6.5 years ago. And when I first came in, someone messed up my taxes so bad, I was on the verge of bankruptcy.
Oh,
And
wow.
since then, I have been looking for proper tax guidances and look for ways to legally strategize things. And I started multiple businesses. As a matter of fact, I had 6 businesses so far, 7 businesses. I lost money in 4 and made money in 3.
There you go.
And then realized that there's a lot of businesses that's really good for making money, but parking your money with tax benefits might be the best industry, might just be the real estate. So that's what, when I started looking into different mentorships, ended up purchasing my first property in 2019. Remember correct? 2020. Then 2021, both of them are creative deals in Virginia and Maryland, especially in the DMV area where I'm based out of. I am currently looking into other markets, but slowly but surely, as I realized the king of tax benefit, which is the depreciation, that's how I started getting into real estate, and now mainly focusing on creative strategies to reduce the risk and maximize the profits with properties and maximize the tax benefits.
So yeah, tell me a little bit more about what you've explored so far on the creative deals side, and then maybe touch a little bit on these like grants and these sub-2 wraps that you're doing.
So one of the grants, both of my deals have been created. One of them is now a house hack. The other one is a sub-2 wrap. I got paid to buy both. And the first one, during the COVID, there was a significant amount of grants money going all over the place with no PMI and with 1 to 3% down.
Yeah.
So that's when I went with Bank of America first time homebuyer program. You have to go through some of the state education for first time home buying and all those kind of stuff.
Right.
And I did that and ended up getting the grant of $17,500, I think, including all the expenses with closing costs. I had to spend about $7,000 ish, and I bought the property at 357, and immediately after that, I actually took a second position lien, which was $46,000, totally tax free, and bought another land. And that's been a pretty interesting investment on my side as well. The other one was through a wholesale connection. It was an expired listing. It was under the water. I don't know if how savvy a lot of people is. When you have a house which is valued less than the actual mortgage is, it's called underwater. So the mortgage was about $234, and the best offer they got was $215, and the real estate agent couldn't sell it. So we ended up taking it down, subject to, with the existing loan, then wrapped it with $40,000 down, And that $40,000 actually covered all of the basic repairs that we needed to do, and also the closing costs that we had to go through. And I think there was about $1,500 left for us from the down payment, and the remaining net was about $625, somewhere around that part, after all the interest and taxes paid. Now he actually holds the deed, but we take a wrap payment every single month. So it's more like a cash flow. The only caveat to this is I cannot depreciate it since I don't hold the deed. But on the other one, I do depreciate the property as I am doing the house hack.
Nice. So could you explain the concept of this leveraging tax benefits in real estate investment for our listeners?
So the moment you enter the realm of creative strategy, it is so vast. Of course, if you're going to a traditional route, I literally filed tax for another client of mine. He's based out of Delaware. He has about 17-ish properties, but he bought all of them traditional ways. In different states where you have still lower purchase price, and then he refied all of them. So he did take a significant amount of chunk of liquidity, but not having to pay taxes on any of them. So there's multiple folds of tax benefits on how you structure a deal. So just to start at the very basic side, you buy with traditional way, put down cash or put down 20%, 3%, however you want to put it. You take depreciation against it, which is a portion of it being paper loss, even though it's not actually a loss, against the property that you have and all the income. So now a good chunk of your income becomes tax-free because you're writing it off against a paper loss. The second part of it is if you have it creatively. So now when I say creative, there's multiple different ways. So say, for example, you buy it on sub 2. I have other people who has been buying sub 2 and filing taxes, different strategies. The sub 2 actually allows you to keep the loan into the existing owner's name while having the deed with you. But now you are the one who is able to depreciate the property.
Because you have the deed.
Yes. Now, even though the interest is not with your name, you are still able to write off the interest and the taxes paid just because you control the property.
Interesting.
The second aspect where
go ahead.
The second stage is when you're more full-time into real estate as a real estate professional or using the short-term rental. As a matter of fact, I filed another tax file this year who made about $470,000 and didn't pay any taxes because he was full-time into it and he was using short-term rentals, and he took a bonus on 2 of his properties. So all of those stuff actually was written off against the bonus, which is the paper loss. Now, last year it was 80%. This year it's supposed to be 60% in US. Now, I know Congress is going back and forth, but if that bill is not passed, we'll still have to go through the 60%. But I think up until this year, it's going to be still worth it with the 60% bonus. So what it does is either way you buy the property, you have it divided into multiple components. There are things, if it is residential, it is going to be at 27.5 years. But if you're using it as a Airbnb, it's going to be on the 39-year schedule. But the things inside, so say, for example, HVAC, electricity, plumbing systems, they're going to be treated as much lower life cycle. So say, for example, some being 5 years, some being 15 years, some being 20 years. All the ones that is less than 20 years, you can take bonus depreciation, which is up until last year, it was 80% of all the depreciation allowed in the first year, and not take that, hey, if the entire expenses that I would have been taking over the time, now what I'm doing is I'm taking all of that in the first year and taking them against my income. So this is a very interesting strategy. So say, for example, if someone's using the short-term rental loophole, he can use it for the first year,
Mhm.
where he's going to be using it against much higher income than if he turns that back into a midterm or long-term rental. The depreciation is going to be lower,
Mhm.
but his income is going to be also lower. So now he did take a higher amount of depreciation, in some cases, even against his W-2 income, if someone has the W-2,
Mhm.
if he's using the short-term rental loophole, and successively not paying any taxes on the income on the rental or any income that he's making off of the real estates. So that's how the wealth get really wealthy
I
without
buy one
paying much
every
in taxes.
year, take 7 years of depreciation every year, and defer some of your taxes. Now, you mentioned looking into, bigger deals like in Michigan and Ohio. What factors are you considering when you're looking to expand into the new markets?
Couple of the things, of course, when investing remote, the very first thing I prioritize is a local boots on the market partner.
Yeah, boots
The
on the ground. Yeah.
second thing I also look into is the cash on cash. I understand the tax benefits are there, but if there's not enough cash on cash, I personally try to avoid that. What I mean by cash on cash is how much cash am I putting in and how much cash am I netting at the end of the year.
Yeah.
And also the area is a significant element for me, because if you have ever been to Michigan areas, Detroit, there are some places which is fabulous for investing, but there are some hoods that's really tough. Unless you
Mhm.
are local, it's really tough.
Yeah, you buy it over the internet. You're not sure what you're buying. So, how do you balance the pursuit of tax benefits and ensuring profitability in your real estate?
So that's a very good question. Uh, it's actually deal by deal basis.
Mm-hmm.
And what am I going to be getting into that specific area? So, say, for example, one of the things I personally do with myself and my tax planning clients is sit down towards the first end of each quarter,
Mm-hmm.
say that, hey, what do we need to do in this next few months to actually ensure our profit taxability? And when it comes down to the balancing of profitability versus the taxes, I always prioritize the profitability first.
Mm-hmm.
So I understand that tax benefit is a great thing, but tax planning should be done on things that you're making money, not in the expense of losing money. I
Mm-hmm.
understand different market is different. Like if you're in New York and if you're probably self-managing a property, you might be very good well off if you're just breaking even or making a couple of $100,
Mm-hmm. Mm-hmm.
because of the fact that you're not going to be making your liquidity on the cash flow. You're going to be making your liquidity on the refi.
Mm-hmm.
So if you ever looked into Barbara Cochran, one of the Shark Tank sharks, she constantly puts multiple liens against a property every time it comes up with some equity.
Mm-hmm.
So that's where it becomes a market by market issue. But when you're looking into the areas like Detroit, Ohio, or even Missouri, you have to focus on the cash flow because those are mainly cash flow market, as
Mm-hmm.
opposed to New York being an appreciation market. So it depends on each individual investor's situation and deal by
Mm-hmm.
deal basis. But if you're asking me, I personally prioritize cash flow over equity.
Mm-hmm.
But uh, I have done deals with equity or have seen people do equity over cash flow if I am sitting on a significant amount of tax burden. I
Yeah.
have not personally been into a situation that I just have to buy to burn cash at the moment, but so far all of my deals have been focusing prioritized with cash flow.
So, what advice do you have for aspiring real estate investors looking to maximize their tax advantage?
First of all, don't just buy because someone said that it's a good deal.
Mm.
And because of course you can write things off, but don't write off just for the heck of write off. Another thing I would also recommend people, especially who have W-2s, especially if you're making more than $150,000,
Mm-hmm.
if you are not planning or your spouse is not planning to go full-time into real estate might not be always the best vehicle for it, if for the tax perspective. But of course, on the wealth perspective, it's always a much
Mm-hmm.
better deal than
Mm-hmm.
others. But from the tax perspective, I would tell them that look into areas where you can leverage the short-term rental loophole. If you have a
Mm-hmm.
W-2, high W-2, husband and wife working on two W-2s, focus on short-term rental loophole areas where you can leverage that. But if you have a spouse who can be full-time into real estate, then explore whatever the thing that you can get. Because at that point, as much as real estate that you can get, that's going to be your best bet, even if you're against a W-2, because if one of them qualifies as real estate professional, depending on how much you make, all or significant portion of your W-2 might just be written off against the entire real estate portfolio with bonuses. So one of the things I would recommend whenever you're making a tax-based decision, sit down with the tax professional, ask them questions that, hey, this is what I'm trying to achieve, this is what I'm trying to do. Suggest me what is going to be my tax implications for them.
Mm-hmm. So how important has networking been in your real estate journey? What sort of tips can you give us for building your network in this industry?
That's been the biggest thing. I mean, doesn't matter what you do. One of the things that I struggled as a business owner, being a mechanical engineer. So we mechanical engineers are treated to or programmed to talk to machines more than human.
Yeah.
So we lose that human connection and end up in a very sticky situation when we try to start a business. We have to go through our ups and downs. That's I feel like one of the biggest thing I lost money in businesses at the beginning was because I was not a great networker. My deals came from networking.
Mm-hmm.
My clientele came from networking, and my strategies came from networking. So if you're talking about three basic parts of any business is your leads,
Mm-hmm.
your systems, and your know-hows. These are the three very fundamental things of any business, not only real estate, whatever you do in life. All three of them came from networking. I am part of now multiple real estate investment groups. I go to meetups regularly. As a matter of fact, last week I was there. I'm going to be speaking on another networking event this Saturday and the following one as well in the upcoming months as well,
Mm-hmm.
especially on real estate strategies. And every time you go to a networking event, you learn something new. As a matter of
Mm-hmm.
fact, last week where I went, I learned something pretty new about short sale investing, which I didn't know previously. So every time you're talking about networking, this is, I feel like, the backbone of any business if you want to grow anything in the modern world.
Interesting. Well, when you look at, because a lot of people don't really understand the taxation. How do you help people kind of break that down when it comes to the real estate side of things? Because everyone knows they're going to take their files, they're going to go to their accountant or their tax professional, give it to them and be like, how can we be proactive when it comes to tax management, when it comes to real estate, and how those two go together?
That's a great question. That's why I personally have people to go through tax planning sessions over the
Mm-hmm.
year as opposed to just sitting down and doing nothing towards that. Let me give you a simple example. I'm filing a tax of someone who is pretty good at buying real estate.
Right.
But the way he is structured, he's looking at about $30,000 in tax liabilities.
Okay.
Another guy who did plan, he made more than him, but most likely is not going to have any tax liability.
Hmm.
So this
Because
is the
he's
difference.
proactive.
Being proactive over the year, understanding your strategies. I understand it's pretty easy to say that, hey, I'm going to buy a bunch of real estate, because a lot of the online people that we see, they're full-time into real estate. their main business is real estate. But
Mhm.
when you have a W-2 and trying to do that long-term hold strategy, it's not always the best thing unless you have a spouse to qualify as a professional. So one
Right.
of the biggest thing I tell people is that, hey, connect with a proper real estate tax planning guy.
Mhm.
Sit down with him regularly. Whenever you're trying to buy new real estate, understand the tax implication, the strategy. As a matter
Mhm.
of fact, this week, I sat down with 3 different individuals regarding 3 different strategies. One was a short-term rental guy. Another one was uh, a flipper. The third one was the multifamily guy. And as a matter of fact, depending on how you are working, I'm actually working on partnering up with one of them with one of the big deals.
Interesting.
So that's how not only you sit down with your tax professional, if he's savvy enough, he might be your partner in that deal as well. And depending on how savvy he becomes, the structure that might come out with it is not only going to be the most tax efficient, but also the most profitable. Because the
Mhm.
way so say, for example, the one that I'm working on structuring is we're pitching it to be a much higher cash on cash for us and a higher purchase price. So in both cases, but we are going to have a higher cash flow. How?
Right.
Because we're going to be expanding the amortization schedule. So if you're expanding that, even though if you're paying higher, the moment you say a higher purchase price, that's a higher depreciation schedule for it.
Yeah.
Now you can take much higher depreciation and a higher cash flow with much lower down payment.
Mhm.
On the other hand, the other guy who's seller, he's also going to be getting a better tax situation deal because
Mhm.
he's not going to be hit with a few $1 million worth of tax bill at the same time.
Right.
So that's where it becomes really interesting when you're working with someone who understands it and also wants to be part of it.
Mm.
So I definitely recommend reaching out to your tax professional, explaining things to him. And of course, I also have a YouTube channel myself, which is MTR
Mhm.
Groups, where I try to explain these concepts as simplistic as possible and with real life examples. Of course, depending on how private those informations may be, I'm going to be sharing some and not sharing some depending on the level of intricacy. But I would love I try to explain things with real life examples and as simple as possible. So follow people out, reach out to those tax planners, and be proactive for you to get the maximum benefits. And also understand that, hey, what is the most profitable way to structure that as well?
Mhm.
That's when the networking part comes into as well. The more you understand and know more people, they're going to be able to help you out with much creative structures as well.
Awesome. Awesome. Well, if people want to connect with you, they want to find out more, they want to pick your brain a little bit about this whole tax advantage thing, what should they do? How do they connect with you?
I'm pretty active on Facebook and also working my way to be active on Instagram
Yeah.
on my MTR Group's Instagram page. And of course, I don't know if you're going to be linking my Facebook page. We can connect you can connect me with directly. I'm still the guy who's responding. I'm still a human. You're not going to be chatting with a bot, that's for sure. And or
Awesome.
if they want to email me, they can also email me at mtrgroupsofficial@gmail.
Awesome. Awesome. So yeah, I really appreciate you stopping by.
I appreciate you having me as well, and I hope I was able to add some values to your viewers, and hope we can add more value to the average people across the world.
Awesome. Awesome. Well, until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.